Hey everyone, I just wanted to go over the Renko setups that occurred today on the NQ. If you're interested, I am doing a webinar on this setup on Wednesday at 4:30 p.m. Eastern. If you want more information, just go to my site, easyeMinitrade.com, and click on the webinar tab at the top, and all the information is there. All right, so what we're looking at right now is the NQ, and the Renko setup. Using Ninja, we're using the Uni Renko bars, and in Sierra, we're using the Flex Renko, and I'll give you all those settings during the webinar on Wednesday, so no worries. But it's a pretty easy setup, and a couple little nuances that I'll go over on Wednesday with some of the higher period moving averages that kind of keep you out of the chop. But here's where we opened. You could see here at 9:30. And this is just coloring the background based on the histogram on the MACD. We're using that as a filter for taking the entries off of this Renko chart. And so off the open, a little chop. This moved down lower. There really wasn't a setup if you're going to use anything to filter out the trades. I tend to stay away from the round number areas. I usually have a zone around that I'll either do range trades if it's quiet, or just stay away from trades in that area. So once it gets through the round number area, then I can always look for an entry off of, one of the other type of charts that I like to trade off of. So basically this is designed to try to keep us out of the chop. So Gordon did an indicator for us that will color the background based on the MACD histogram being above or below 0. And you have the option, you can put the arrows where we get closed above our entry confirmation here. And when we're going against those higher period moving averages, you can use those as target areas. And then if it gets through, then you're looking back up to your resistance area, which would be 5,900. So if you were to take this against the move that just happened, then you would be looking at this general area here as a target, and then up at 5,900 as a target, and then up to this, if it gets through there, then up to this higher period moving average. If you don't have a lot of room to the higher period moving averages, which would be this one here and this one up here, then you may decide to not take the trade if you don't have enough space to hit your targets, or let it go and then just take an entry off one of your other types of charts that you trade from. Next valid entry was here as a buy, and again, same situation as back here. You're above the smaller period moving average, which is no big deal. This one's kind of small. I think this is a 21. So you would look at the area of resistance as your target area. So this one you could take, and I'm not saying that you couldn't buy the bottom, off the low of the day. This is one setup, okay? So you can make use of it in conjunction with whatever else you're using. We got this buy here. It wasn't valid. Even if it was, we would be into that higher period moving average here. So again, it's not saying don't take the trade. It's just saying use caution if you're going to take the entry off this chart. And this does require a bigger stop, so that's why you're going to pay a little bit more attention to it. And we had some huge swings this morning on the NQ. And so even though we didn't get a setup on the Renko here or here, confirming it with our filter, there were other ways to get in. We had slinkies around all of those that we were able to take off of a range chart. So it's just one way to take an entry, but this does cut down on the noise overall. Here you could see we get our little arrow for a buy, and it wouldn't have triggered you because the entry that we've been using is 2 ticks above the high of this bar, and this one wouldn't have triggered you if you were thinking about it. But this, like I was saying just a moment ago, goes against those moving averages. These are moving down and they're red and you're under them. So a higher probability trade would be to stick with the overall trend. So like here, even though it's not valid for a short, if you wanted to be aggressive, you could still take it. And plenty of opportunities off a smaller chart. So not to worry if it takes off and you're not in it. Here's a buy against the moving averages. right? You could see if you buy above here, you've got this moving average right here. This one sets up and you're actually above it. And this was a decent entry. I actually took this one, I think. Let me see. Have to look and see what time was that. 11:04. No, I think it was a little bit later. Anyway, this is above the moving average here. So your next concern would be the moving average above your head, right? You're against the moving averages. It's just like if you use a 90 or 200 period moving average on any of your charts, or any moving average for that matter. The further that price gets away from it, the likelihood is that price will retrace back to it or go sideways until the moving averages catch up to price, because obviously moving averages are based on price action. Here's a buy here, valid, works out here. Now these aren't valid because this isn't valid when it got closed below, because the filter didn't agree. Same with the buy here, filter didn't agree. If you're using the Renko chart and you see all these tails all over the place like this, that's a heads up, it's chop. Just be cautious of where support and resistance areas are. So this one here never closes below, so there would be no entry to consider here. This one gets closed above, just like before. We're talking about the moving average being right on top of you. Also, if you look to the left, you can see that we are ranging sideways. It's created some resistance. So you might opt to take an entry off a smaller chart where you're not using such a big stop. Here, short entry here. Moving averages agree, you're under them. And this will disappear, but the way that Gordon has the indicator set up is that it will put the entry prices on your chart, but it won't stay there. So I think it will show for like 2 or 3 entries and then it will disappear. So this short, valid. This buy right here, valid. So once again, into the moving average, you're going to use that as a possible stall area. And that falls right in line with this little congestion area. Once you're through, then you're looking up at the next area of resistance. This short, not valid. This buy, not valid. And that is it. So the big thing is make sure that you are taking the entries with the overall direction of those higher period moving averages. And if you see that the bars are forming lots of tails, you can see here, bottoming tail, topping tail, bottoming tail, topping tail, chop. So be cautious. All right, I will go over more of the nuances on Wednesday. If you have any questions in the meantime, feel free to send me an email. Have a great day, you guys.